So you found yourself in some drawdown. It's going to happen to everyone. Don't beat yourself up. It's part of trading. But let's cover 3 steps to handling drawdown. The first step that we're going to look at is take a break, but don't quit. Now, what this means is you're still going to do the same routine. You're still going to go and look at the charts. You're going to back test. You're going to trade as normal. But you either might not trade for a couple of days, or you might just look at the charts without taking a trade for that day. What that's going to accomplish is it's going to remove the emotions from the equation, which is where a lot of drawdown stems from. If you have a nice solid trading strategy, or you're finding yourself getting a little emotional with prop firms, with options trading, you're trading 0 DTEs just because you don't really care about the money right now, you need to take a step back. You're not going to quit trading. You're not going to let it go. You're not going to slide it out the door. You're going to take a small break. You're still going to watch the charts, and you're going to analyze how your strategy is working, how your methodology is working. For today's instance, okay, I'm going to take an IB trade. We went and broke the IB low. Nice retest. I should have entered short there. We had a nice retest down, retested the IB low. Okay, Trump tweeted something, continuing down. Analyze the charts the same that you would any other day. Just don't take a trade with it. There's no problem with studying the charts. There's no problem with analyzing real-time market data without putting real money into it. If you're finding yourself in drawdown because you're just forcing trades for whatever reason, trades that you wouldn't otherwise take a break. Take a day or two, watch the charts, go for a walk, whatever it might be. And something that I do that I find extremely helpful is if I'm having a bad day, bad 2 days, bad 3 days, bad week, even a bad month, right after I'm done that trading session, even if I'm red, even if I'm green, I get up, I go take a walk, I take the dog out. Something to clear your head. Don't look at the charts for a little bit. Just talk to yourself in your head. Say, okay, this is what I did wrong. This is what I did right. We're going to move on to the next day. I'm not going to look at the charts for the rest of the day. That's what I mean by taking a break and not quitting. Step number 2 is going to be journaling. And I cannot emphasize this enough. You need to be journaling. I have another Discord open where I go and type in all my notes. Some people do it by hand. Some people do it by voice memo. Very few. As long as you're able to go back, and this is why I do it on Discord. I just have another Discord open that's just me in it. If you're able to go back and analyze a day that had almost identical price action to what's going on right now, whether that's April of this year or April of 2022, December of 2022, whatever it might be, where price action was most similar to what we're experiencing now, where if we go to the 24-hour time frame, we're not really having that much drawdown in the market. We're having a lot of volatility. The market's spiking up and down based on tweets from Trump. What you want to do is you want to go and analyze journals from when you were trading in an environment that was most similar to this. For instance, we had this price action pretty much at the beginning of the year, March all the way until April, where Trump was tweeting day after day. Tariffs, do we not have tariffs? Do we have tariffs? Do we not have tariffs? And the market was spiking up because the market was so volatile. Another simple way to do this is just measure where the VIX is. This is one of the things that I do with almost every journal that I put in. I type out what the VIX was trading at for close. So we have the VIX trading at 1860. Last Friday, we had the VIX trading at 29. Friday before that, we had the VIX trading almost up at 20 again, so on and so forth. What that does for me is I go and do a control find search, and I look at the VIX price. Right now, we're trading at 1850. I do a control find for, just type in 18. That will bring me a wide selection of days where the VIX was trading at 18, and I can analyze how either my London 50 model was doing or another model through Edgeful, whatever data I happen to be using when the VIX was trading at that level. Journaling allows you to remember memories that you would have otherwise forgotten because you cannot remember that much. You can't remember how every trading day went, but what you can do is you can log every trading day. Edgeful does that automatically with a lot of the reports, but you're not going to be able to analyze how that single report traded on that day where the VIX was trading at this number Okay, Qs is trading at this amount. I also plug in what either Qs or SPY was trading at for the day. And that really, really helps with being able to determine how my strategy was doing. If I go and look at the London 50, for example, and I have Qs trading at 600, which is obviously irrelevant because we're trading at all-time highs right now. But VIX, something that typically ranges from 12 all the way up to 40, 50, 60 plus. If I see that my London 50 model went all the way down to, let's say, about a 50 to 60% win rate when the VIX was trading above 20, might be time for me to slow down a little bit on the London 50 and go back to either just taking the initial balance trade or looking to just sell options while the VIX calms down a little bit. That's what I'm getting at by journaling, and you need to make sure that you journal every single day, even if it's just a couple minutes right after 4 o'clock or right after you're done your trading session, which would be 11:30, 12, 1 o'clock, whatever it might be for you. Journal your logs, have a variable in your journals that you can go back to and refer to whatever we're trading at right now. For me, it is the VIX. Now, the last step and the most important one, do not change your strategy. Do not change your model. Do not change your concept. If you have a true statistical advantage in the market, like I do with the initial balance breakout and the London 50, or if you use any of the other statistics that are on Edgeful that all have winning strategies, for instance, if I wanted to take a gap fill today at a 63% chance of filling, 61% chance of filling if it was gap up, 63 if it was a gap down. If I want to take the initial balance breakout, this one has a 69% chance of happening for a single break, 29% chance of having a double break, so on and so forth. Whatever concept it is that you're using, continue to bet on the better statistic. That is your statistical advantage. That's your edge in the market. I use the IB and the London 50 every single day, regardless of emotions. Even if I feel uneasy about taking it, I should still take it because that is removing the emotions from the equation, and that is my statistical advantage in the market. Now I'm going to use a coin flip chart here, just as an example. Let's say every time you flip a coin, you bet tails. There's a 50-50 statistic that you're going to hit tails or heads. So every time, just out of superstition, you bet tails. Monday you would have lost, Tuesday you won, Wednesday you lost, Thursday you lost, Friday you lost. The following Monday you won, Tuesday, Wednesday you lost, Thursday, Friday you won. If you're just going on the odds, after 4,000 flips of a coin, you're going to have what should be 2,000 wins, 2,000 losses, if it was statistically accurate or statistically perfect. Now, if you start disregarding your edge, and for whatever reason, let's say you have an edge in flipping coins and having them land on tails, if you start disregarding that and after a few losses, you start betting heads, let's say you lost the first time, okay, I'm going to bet heads now on Tuesday. You ended up losing. Okay, I'm going to go back to tails. Now you lost again. Okay, I'm going to stick with tails because I don't know why I disregarded my statistical advantage. Now 4 days in a row you've lost. Where if you had just stuck with your initial concept of calling tails, you would have won 1 out of 4. Now every trading strategy is going to go through drawdown. If we go to Edgeful and we go and look at Qs for the initial balance breakout report, it tells you what each day has done for the past 5 trading days, 6 trading days, or whatever it might be. We can see that it's had 2 single breaks and 3 double breaks over the past 5 trading days. Even though the single break has a very high statistical advantage, 74% as opposed to 24%, it's happened only 2 out of the past 5 trading days. A winning concept is still going to have loss streaks. It's still going to lose on 2, 3, 4, 5 days in a row. But over time, it's going to win 4, 5, 6 days in a row a lot more often than it has losing streaks. As long as you're trading the same concept, you're using the same sizing, you're removing the emotions from the equation, you're going to come out on the winning end. You start getting screwed over, when you switch up your trading strategy while you're on a statistical collection or collecting data for your statistics. If I'm only betting tails and we flip the coin 10 times, I win 4 out of 10 times just for this data. If we double that, it should start getting closer to 50-50. If we go all the way up to 10,000, it should be damn near 5,000. If you have a winning concept, just like Edgeful is showing here with the single break, yes, the past 5 days, 2 out of 5 have won. If we expand this up to the past 127 days, 94 out of 127 have won, whereas only 31 out of 127 have lost. 74% of the time I'm winning, 24% of the time I'm losing. That's not a bad statistic to have, and it's going to happen with every trading strategy. This is why this is the most important rule, because you cannot start changing the model that you're trading midway through trading that model or concept or methodology, whatever it might be. When you start switching up on the statistics, when you start saying, okay, instead of a double break, I'm going to bet for a single break or vice versa, that's when you start stacking 4, 5, 6, even up to 7 losing days in a row. And you continue that model into the following week, you're going to lose another 5 days in a row. And that's how you create a losing strategy out of a winning one. You need to continue to use the same strategy. You need to journal your entries, your exits, every trade that you take in something that you can go and refer your trades to. And you need to take a break if you are really getting into a bad drawdown. Just make sure that you're studying. Take a break. Don't put any real money in. There's no need to quit. Just study what you're doing wrong. Those are my 3 steps for handling drawdown. It's going to happen for everyone. Right now, for me, I'm in drawdown on bull. Even though I sold cash secured puts on it, I'm down about $3,000 or almost 10% on this position. It's going to happen. I've won on bull for the past, 4 or 5 months in a row, just like on TSLL. I've won 17 out of my past 17 trades. On HIMS, I've won 14 out of my past 14 trades. I might get assigned on this one, meaning that 1 out of my past 15 trades is going to be quote-unquote a loss. Just means I'm going to get assigned on the position. It's going to happen. Statistically speaking, I cannot go on a 100% bender forever. Those are my steps to handling drawdown. Hope those helped you. If you have any questions, drop them in the comments. If you have any video recommendations, drop those in the comments as well. Like, subscribe. I'll see you guys next week.